All right, let's talk. The fintech industry in Nigeria has helped to expedite financial inclusion. To this end, over 20 million new bank accounts have been opened via traditional banks and fintech companies since 2020, bringing the total banked population in Nigeria to 63%, while also accelerating the financial inclusion strategy of the Central Bank of Nigeria by 20%. Studies have shown that the pace of fintech in Nigeria is astronomical and looks to hold for a very long time, even though the prospects look interesting. Questions have been asked about this wave, how this wave affects businesses and their products or consumers. Meanwhile, it is also impossible to talk about the contribution of fintech to financial inclusion in Nigeria without looking carefully at CBN strategies and kickstarted the process of explosion in the first place. Let's explore industry issues and, of course, discussions around financial inclusion. I'm being joined by Dr. Chijoke Ikechukwu, who is the MD and CEO of Dignity Finance and Investment Limited. Thank you so much for your time. It's good to have you on the show, Dr. Ikechukwu.
Thank you very much, Tolu.
Yes, we were not able to connect on the other side. We're happy we were able to connect with you. So I'm going to take you back to first discussion around inflation and what's your reaction to that? Was that what you were expecting? And if that was it, what's responsible for this continuous hike?
Of course, the inflation we're facing today is a global circumstance. Of course, the latest is coming from the fact that the Ukrainian and Russian war has actually affected a lot of supply chain processes. And so the distortion in that process is just what is causing this one that has happened globally. But of course, in our own country, a whole lot of other things are responsible for the level of inflation we are having today. Before now, we all knew that the exchange rate has been a major contributor to the rise in inflation. We also knew that the insecurity in the country has contributed a lot to the supply chain of food, obviously. And of course, a lot of other finished goods, movement from one part of the country to another. We know currently that the kind of flooding we're having right now is going to also have some kinds of distortions in supply. So these are some of the things that are causing the ones relating to Nigeria. But of course, globally, we know that all these things started from the time of COVID-19 till what is going on now, when the entire world is experiencing the impact of the war in Russia and Ukraine. Those are the things that are actually happening to us and happening to the whole world. For us also, you know that the price of petroleum products, which also is contributing adversely to what is going on in the country. The price is so high and everybody is paying the price right now. So these are the things causing the general inflation rate, as we can see.
Tech, what is your projection for inflation? We are moving towards December, where there will be a lot of buy-ins, of course. Okay, projected buy-ins. It's expected that people will buy so much during that season. Manufacturers are expected to also improve production as we move towards the end of the year. But it's also a pre-election year. What are your thoughts?
In determining the effects of inflation, there are two kinds. You have demand pull and cost push. And so all that we have been having all this while has been the cost element of inflation. We know that all the things I have mentioned, the price of diesel that is so high right now, the exchange rate, the insecurity, these are all cost-related and cost-push kind of inflation. Towards the end of the year, we're going to be having demand pull, which is the inflation caused by high demand. And in such situation, no matter how high the price is, the demand will still be high. So of course, the demand is going to be high at that time because of the demand for various items relating to the end of year and the season of that time. So these are some of the things that are going to cause the inflation to rise. We also know that as we enter election period, a lot of demand for foreign currency will be there. We also expect that the foreign currency exchange rate is going to be high. And if it is high, it will also affect the inflation rate. So we are expecting that between now and the end of the year, the exchange rate is going to remain high. Again, coupled with the fact that the CBN had already notified that by the end of the year, they're going to stop the intervention they're doing with the deposit money banks. And so if they do that, and the Bureau de Change not having such intervention coming from CBN, we already know what the outcome is going to be. The demand is going to be higher, far, far higher than the supply of these foreign currencies, and it will just lead to inflation. So those are the expectations for the end of the year, as we expect politics to take greater portion of our activities for that period.
Well, let's move to talking fintech now, which sounds very interesting. My first question would be, Nigerian fintechs, we see them doing good, attracting investments and all of that. But do you think that there's any competition between the fintech players and the regular bank workers or regular banking services?
Recall that some years back, probably even up to the early part of 2000, if you wanted to make any payment to anybody, say from Lagos to Abuja, your check will stay for 21 days before the person in Abuja will get value for the money. Of course, while the interbank system continued to work harder, the number of days reduced to about 15 days clearing for up-country checks that we used to call them then. Of course, the thing reduced to 7 days for up-country checks and later reduced to 3 days. Right now, people can make payments online real time, and people get value for transactions that would have taken 21 days to be consummated. So I don't see any competition. The fintechs are actually there to complement the activities of the deposit money banks, and it's so that most of the commercial banks or most of the deposit money banks cannot actually compete with the fintechs because they are in a different platforms. They are working from different platforms. Of course, we also know that the deposit money banks are still, they have the capacity to do exactly what the fintech companies are doing. So what they do is just to make their own system more robust. So every deposit money bank is investing so much in the fintech area, and just for them to remain in business and be competitive. Otherwise, what the fintech companies have done is just to complement the activities of banks and just to make banking very inclusive. And that's just what we are experiencing.
But many would say, as a result of the COVID-19 pandemic, we saw a spring up or a lot of shift to the digital space. Maybe that's why a lot of searchlight is now being beamed on this sector. Now, what are the prospects of the fintech space, and how will it help boost financial inclusion?
Yes, for whatever thing that has merits, there will always be demerits. Talking about the prospects of fintech, it is on record, and we all have experienced it both here and outside the country. And Nigeria is one of the fastest growing fintech country. The kind of fintech transactions we do today in this country are still not able to be done in many developed countries, I can tell you. And so we can give kudos to the fintech companies of Nigeria and the way we have really advanced in fintech in the country. The prospect, the fact that we'll continue to grow, there's going to be continuous competition. And once there's competition, there will be advances, innovations, and creativities in these areas. And because we are going to be growing as fast as we have already developed, because once you remain where you have been, competition will take you out of the market. So all the fintech companies are working hard every day to see that more and more innovations come out to make life easier for payments. Now, on the demerit side, we also know that in one sweep, somebody's money in his account can be wiped off without any intervention, without any interference of the deposit money bank, and those are some of the demerits. So as they are building these innovations, they are also meant to be building the security side of the innovations they have. So as fast as we are moving in fintech industry, we are also supposed to be building the blockchain side of it to make sure that to encrypt so much that we make sure that people don't have access to people's accounts and to wipe off all those things. We have seen a lot of people who have lost monies because of the use of fintech. So these are some of the demerits. Otherwise, the advantages are so enormous, and we can actually, people can access credit facilities today at the comfort of their homes and their offices without moving anywhere. Just all you need to do is just to supply the relevant information. I think it's creating a lot of inclusion and a lot of financial activities within the system, and I think it's a win-win for everybody.
Let's talk about how this will also help as we move on to the AFCFTA, which is on the block. And many say that if this is seamless, we would be able to also, actualize this and move on. Do you see fintech also as a way to go with regards to the AFCFTA?
Yes, obviously, but some of the areas that will make that to have some inhibitions will still be the fact that we have to make payments in some foreign currencies. Because we do not have one currency for the whole of Africa, there may be some inhibitions in using fintech to make payments all over the world. And the level of fintech we have today still makes it a little difficult for people to make payments in foreign currencies outside the country, except you are actually debiting your foreign account and making such payments. But the type of fintech we have today is still in local currency and still not able to. For example, if I want to transfer some monies in dollars to other people in other countries, I still cannot do it from my system, except I walk down to the bank and expect them to do that transfer. And we still have some restrictions in the foreign currencies space today, to the extent that people are still not able to make transfers the way they can make transfers in Naira. They can't do that in dollars or any other foreign currency. So those are some of the restrictions we still have. Otherwise, it will also help when we are able to fine-tune the use of fintech in making foreign payments, especially in Africa. We need to have a common settlement system within Africa so that payments within Africa can be seamless. So I want to believe that the African system, whether AU should be able to work hard to make sure that we make payments within Africa seamlessly. And of course, the current common currency of ECO that we've been working on for ECOWAS will also help in that space. So these are the things that are supposed to make the advantage of fintech to materialize in making payments outside of Nigeria to Africa.
Well, challenges around infrastructure, around technology advancement, power in this part of the world seems to me to be like a challenge for us here. How are we working to address all of this?
Yes, those are the challenges that we already have
as a country.
It's affecting every industry right now. The power is that which is affecting every industry. If we're talking about why manufacturing sector is having lower than 50 in PMI, if we have that, we know that major problem is that of power. We also know that many all the sectors of our economy are producing lower than optimal level just because of power. So ICT will not be isolated from this problem. But I know that many institutions that are running FinTech and ICT companies are already having their own sources of power and making sure that power and energy will not be a problem and will not be a problem in execution of what they're delivering. Knowing that some of these things require 24 hours online real-time transactions. So they will ensure that power will not be a problem. Imagine that we have a platform that we're using and you want to make payments to your customers, and because the provider of your fintech is out of power, and they won't have any excuse to give you. So all fintech companies already have backup for electricity and to make sure that that will not be a problem. Of course, it comes with a lot of costs. Cost of making sure that you have 24 hours electricity will always be built into the cost of doing the business and will always be borne by the consumers of these products. The same way, many consumers like you and I today are bearing the cost of exchange rate. Most of the providers of these fintech services are already paying heavily in foreign currency just because of the exchange rate we have. So they are passing that cost to the end users, which is just the consumers. So these are some of the issues we have. Infrastructure is not there. It has always been our problem, and it's for that same problem that many sectors of the economy today are producing below optimal level.
So if we are to do better, suggestions and of course interventions for the fintech industry, because many of them say they have challenges of enlarging their businesses, so they are most times limited. What sort of interventions do you think can be done, and what sort of collaborations can they also have with the banks moving forward?
Yeah, one major thing, one major challenge the fintech companies may be having, apart from the infrastructure we talked about, is that we can actually have a fintech village, something we can call a hub for fintech companies, and provide infrastructure to the extent that all of them can share from that infrastructure of power and energy. So if today, just like we have in Silicon Valley in California, if today we provide a particular location and say, gentlemen, if you are in fintech or if you are in ICT, this is where you are going to be. We just build a hub within that area and provide all the necessary infrastructure that they need. The road, the power, the roads, the water, and all that they need. And in fact, if there is anything that will require the provision of some satellite structures, those things will be provided for them. So all they will do is just to plug into what is already existing. That way, they are going to be having a shared expense, and that's going to reduce their infrastructure. Of course, you know that the issues of finances will also be there. To have these structures and the platforms existing, it requires a lot of money in foreign currency and heavy amount of money. So such amounts of money should also be made available in one form or the other. But I think to the extent I know, the venture capitalists are really investing heavily in this area, and people who have come up with very good, viable and marketable systems are getting their funding from many venture capitalists that are out there watching to see who is producing what.
Well, it's a good way to live it. As we move into the new year, we expect more of them to spring up and consolidate with our banks. But in one word, do you think it could affect jobs in any way? Many say new jobs would just be created.
What we have seen today is that a lot of entrepreneurs are emerging every day. We have a lot of entrepreneurs. Young men are no longer folding their arms looking for jobs. They create jobs within themselves, within their phones and within their laptops. And we have seen that the fintech has created a lot of job opportunities for Nigerians. Not that it will take away jobs from the conventional system. Situations must continue to change, and when they change, there are always job opportunities created in those areas. Of course, you and I will agree that a lot of jobs have been created when young men and women have actually been engaged by themselves and by a lot of fintech companies doing very meaningful work. So we have that going on. So it's creating more jobs. That's the advantage we have with the kind of fintech we have today. A lot of people have jobs created for themselves and for the provided by the employers of these fintech companies. So we're moving on and we're growing, and we are also having reduction of unemployment by so doing and by the creation of these fintech companies.
I must thank you so much, Dr. Chijioke Ekechukwu, who is the MD CEO of Dignity Finance and Investment Limited. I forgot to add, he's also the Vice President, Industry at the Abuja Chamber of Commerce. Thank you so much and enjoy the rest of your day.